So this is how you know price is on the downtrend, because you will constantly see a lower highs. The moment you see price make a higher high, this is a sign that price could be going bullish. Vice versa. So you might see this one. So you might see the break of the, you might see the higher high and then the higher low, or you might see this one where price is on a downtrend and then it makes this where it makes the lower high but doesn't make a new low and makes a higher low and breaks the higher high. So you might see that one, or you might see this one where it makes the higher high first, or you might see the one where it makes a higher low first. Both of these are indicating you that price is becoming bullish. Both of them, both ways is indicating you that price is becoming bullish.
So you heard this right from the man. In this video, I'm going to be showing you the 3 types of entries that you can take when it comes to the ICC. So for those of you who don't know the ICC, make sure you watch this video that pops up here. So for the ICC, we all know that normally price gives us an indication, then wait on the correction, then we enter on the continuation. Okay, so let me put that here, continuation. So we are going to be looking at this specifically because this is where our entries is coming from, or this is where entries come from. Okay, so I'll put that here for you. Now, the example in which I'm going to be using an uptrend. So for this first one, it's going to be an uptrend example here. So I'm going to be going step by step so that I'll make sure I don't skip any part here. So make sure you watch attentively, or make sure you repeat some parts that you don't understand, because this is very crucial. And I'm going to be showing you an example how you can avoid fake outs that happen sometimes. So for the ICC, we know that normally we move to the higher time frame. So let's say we are on the 1 hour time frame. So price makes a low, a high, then it gives us a higher low. Then that higher low causes an indication when price breaks a swing high here. So we mark this as our indication. So let me put 1 hour here to indicate higher time frame movements. Now when we get that indication, what are we supposed to do? We are supposed to go on the lower time frame and then look for the correction to begin and end. Are you okay? So when the correction is beginning, normally what does price do? Price gives us lower highs and lower lows for an uptrend. So price gives us a high, low, lower high, lower low. And when price is correcting, it should be doing only this. Keep in mind. So put it in your mind that when price is correcting, it should be making what? Lower highs and lower lows for an uptrend example. Lower highs and lower lows. Lower highs and lower lows. So at any point in time, this is where your first entry will be coming from. So you are seeing that price is making lower highs and lower lows, indicating the lower time frame movement for the correction. So 15 minutes. And put that here. So when price is correcting, it should be making what? Lower highs and lower lows. So at any point in time, if price makes a lower high and then a lower low, like in this example, or like in this position, you can see that price has made a lower high and lower lows. Normally, you want to be marking your support levels that sellers are making when they are pushing price down. They are making support levels that price has to respect. If it is still correcting, price has to respect it. That is why it's very, important, and that is why ICC works, because we are following market structure. So price has to respect these no matter what. Okay, so when price is giving you those lower highs and lower lows at any point, price has given us a lower low, then you see price break above a swing high. Okay, this tells us one thing, that the continuation might begin. Okay, the continuation might begin. So the continuation hasn't begun, but it might begin. So when price is giving you lower highs and lower lows, lower highs and lower lows, what should you be doing? You should be marking support levels, because you are waiting for price to break it and give you an indication that the continuation might begin. So you are marking your swing highs, price is giving you support, you are also marking your support. Then price breaks this recent support that you've marked. This is an indication that price wants to make that continuation. What confirms this is when price makes a higher low. But where should your entry come from? So your entry comes when price comes back above this indication level here. So that level of support that you made, you're going to be dragging it out here. And I'm going to show you an example of how this can save you from losing any trade, or how you can switch that bias if price is showing you that it is not going to continue, or it's going to sell off, or any case. I'm going to show you an example. So you can see that price, when it gives you that indication, that lower time frame indication, and it's correct, it must make that higher low, and then you enter when price is coming back above this level. Okay, so this is it. Your entries must come from when price goes back above that level. So when I go over again, you can see that when price is giving you that correction, it should be making lower highs and lower lows, lower highs and lower lows. So price indicates to you after breaking a lower high. Okay, price indicates to you that, okay, the continuation might begin. So you wait for that higher low. Your entry specifically, this is something you can follow like that. Okay, like the way it is, your entry should come when price is going back above that level. So this is the first ICC entry type that we are looking at here. So let me put it here, entry number 1. So you can take a picture if you want to take a picture. Feel free to take a picture if you want to. So for the downtrend example, I'm going to go ahead and flip this. So let me put downtrend here, then let me flip this. So downtrend. Downtrend example. So if I want to flip this out I, so you can see that for the downtrend example, price gives you a high, then a low, then it gives you a lower high, then it gives you an indication that price is going to be bearish. So what you do, you wait for the correction. So this is the higher time frame movement, this is the lower time frame movement. So the correction is due when price starts making higher highs and higher lows. So for the correction, price will start giving you higher highs and higher lows. So price will give you a high, higher low, high, higher low, high, higher low. So what you want to be marking are your levels of support. So you are marking levels of support that buyers are making when they are pushing price up. So you are marking this level of support, this level of support, this level of support. Price is giving you those lower highs or higher lows and higher highs. Sorry. So price is giving you higher highs and higher lows. So higher low, higher high, higher low, higher high, higher low, higher high. So at any point in time, if price breaks a higher low, this is an indication that price wants to sell. This is an indication, but we don't sell right away. This is just price indicating to us that it is going to sell. So what do we do after price gives us that indication? We wait for it to correct. So price corrects by making a lower high. So you can see that when price was making higher highs and higher lows, you have to wait for price to what? To correct and give us that lower high here. So when price gives us that lower high here, what do? Our entries come when price comes back below that indication level. And this is very important because you are going to be seeing how it is going to be saving you a lot. So make sure you follow this to the tip, because you actually can, unless you learn other ways that you think you can apply to this. But this is the simplest way that you can enter with the first type of entry. So when price breaks a level of support, it gives you that lower high, then back below the indication level. That is where your entries come from. So now let's talk about the entry type number 2. Entry type number 2. Let me see if I'm good. Okay, still recording. So entry type number 2, let's flip this. So we are going to also look at that of uptrends also. So uptrend. So uptrend. So for entry type number 2, okay, what you are going to be doing is when price is making lower highs and lower lows, and we are marking these support levels. So pay attention to this one. This is the one that most people tend to skip. So when price is giving you those lower highs and lower lows, what should it be doing? Because this is market structure, price is giving lower highs and lower lows, it should respect that. It should respect that and continue to give you lower highs and lower lows. But at any point in time, if price gives you a lower high, then it makes a higher low. this becomes an indication to you that price doesn't want to move down from here, because if it did, it will be making lower highs and lower lows. So let's assume that this is another lower high that you marked here, another level of support here. So remember, price should be making higher highs and higher lows, or lower highs and lower lows for this example, sorry. So price is making lower highs and lower lows during the correction. So at any point in time, price shouldn't make a higher low just like that. It should be making lower highs and lower lows. So if it gives you a higher low, this is an indication that it wants to go back up. So your entries come when price finally breaks this support level. Now, this is for your aggressive type 2 entry. Okay, so your entry should come from when price breaks above the support level. Just place it, and then just place it, because sometimes what happens is that for those of you who also want the ICC, what happens is that when price indicates to you like this, most of the times when it breaks above the support level, it doesn't come and give you the higher low again. Okay, so most of the times, not all the time, sometimes it does give you that higher low, but sometimes it doesn't give you that higher low. And you can see that price has a higher low here and then a low here. So you can see that you have two lows showing us that price is bullish. So we don't need to wait for that higher low again for us to take our entries from. That is why I am showing you that when price gives you that higher low from here, you can enter when price breaks that support level, and then you target the high above here. And this is another thing that you can do, or this is the second type of entry that you have. So let me go over again. When price is correcting, it should be making lower highs and lower lows, and nothing apart from that. So price should be making lower highs and lower lows when it is correcting. So at any point in time, if price fails to make a lower low and makes a higher low, what happens? We are expecting that, okay, price is indicating to us that it might end the correction very soon. So we only enter if price comes above that support level. So in this case, we have this higher low as our reference that, or we have this higher low as our point that price shouldn't break, because it has come back above this level. So it has no business down here again. So this is the second type of entry that you can take for uptrends. So if I'm going for downtrend example, obviously I'm going to just flip this downtrend. So for downtrend example, you can see that it's the opposite of uptrend. So you can just take a picture if you want. So price gives you that, high, it gives you this low. So price gives you this high, let me mark it for you, high, low. Okay, then our reference here is price. When price makes a lower high, lower than this high here, lower high, then price breaks this swing low here, giving you an indication that price wants to become bearish. So when that happens, you hop onto the lower time frame, and then price should be making higher highs and higher lows. What you want to be marking is your support levels that buyers are making. So buyers are making support levels as they push price up. So you can see that price is making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So at any point in time, price shouldn't make a lower high, because remember, when it's correcting, it should be making higher highs and higher lows. So price should technically make another higher high, make a higher low, and keep going. But if price makes a lower high all of a sudden, you are expecting that price to make a high, but you are not seeing this high, and you are not seeing it, and you are becoming frustrated. No, price wants to show you that, okay, we might not actually continue making the correction. So you wait patiently for price to what? Break the support level that it makes. So in this case, price comes and then breaks the support level. Your entry can come from when price breaks the support level with your stop loss here. And we know that since price is trending, it should just continue. It shouldn't, or it has no business coming back here again. So you can put your stop loss there. And if price is truly trending, then it shouldn't come and take you out at any point in time. So this is your entry number 2. And I'm going to be showing you the pros and cons that comes with this type of entries. Now let's move on to entry number 3, which is the safest entry or safest option. So let me go ahead and flip this. So your entry number 3 is the safest option. Okay, for those of you who want safe, very safe entries, entry number 3 is for you. So let me put this uptrend example here again for entry number 3. So entry number 3. So for entry number 3, you don't need to go to the lower time frame. Okay, entry number 3, you don't need to go to the lower time frame. Entry number 3, for that one, you just need a higher time frame movement. Okay, but you can also go to the lower time frame and track orders. So entry number 3 basically happens when price comes back above this level. So let me clear this for you. So price has given you that indication, and then it gives you that correction. So price corrects and comes back below this level. So entry number 3 is basically waiting for price to come back above this level and then taking your entries. So it's as simple as that. Entry number 3 is actually the most simplest and it's the safest. Why is it the safest? Because when price comes back above this level, we've already seen the reaction that it can have. So you can see that whenever price comes back above this level, these are the next level of sellers. So we know that when price comes back above this level, price should be able to go back to this level of sellers before it's, does anything else. So this is your entry number 3, and you can just have it on a higher time frame and then avoid the lower time frame if you think it's too complicated. So what you do is that you set an alert for here. So if I want to do this in real time, I'm just going to set an alert here. Okay, right here. So I set my alert here and then I wait for price to hit my alert, and so when price hits your alert, you just come on the chart, you place the buy, and then you put your stop loss below that and then your target. So entry number 3 is actually the safest form of entry, and it has the highest win percentage, because when price comes back above that level, we are sure that it is going to be going up. So the pros of the entry number 3 is that it has a higher win percentage, or it wins most of the times. But some of the cons are sometimes the risk reward is a little bit off. Okay, so you have to if you want to make up for it, you just have to, you might have to expect that price to give you that high so that you can target a higher risk reward. Okay, but the pros are that price most of the times respects this type of entry. So for the other entries, obviously you get a higher risk reward ratio for the other types of entries, but sometimes price, if it changes trends, price can just do anything. So for this example, price can just come here and then keep selling. Okay, so for those type of entries, you are risking a lot. But for the entry number 3, your risk is basically less, because you are sure that price is going to come back above this level, and when it does and you enter, price should give you that continuation. Okay, so for this, you can also take your picture if you want. Take a snap of it if you want. Let me delete this alert. So now let me clear this and let me show you an example of where you could have avoided if you had followed everything else. So let's look at silver today. So silver today, when we go to the higher time frame, let me clear this. So you can see that when I go to the 1 hour time frame, okay, silver gave us an indication that it was going to go bearish. Okay, so I marked this indication level here. So the previous day, price gave us a lower high here and then give us an indication. So when price gives us an indication, obviously we go to the lower time frame and then we track our correction, So you can see that the 50 minutes actually looks clean here. So I'm going to be using the 50 minutes for this breakdown if you want. So you can see that price gave us this indication that it is going to be bearish. So what do? Price should be making lower highs and lower lows. So we are supposed to be marking our support levels. So this is a swing high here that we're going to mark on the 15 This is another swing level, because normally your swings are such that price should move up sharply away from that point. So if price moves away sharply, okay, from a point, then that point can, or let me say, can be considered, okay, considered as a swing level. So if price moves away sharply from a point, then that point can be considered as a swing level. So you can see that when price got to this point, it moved sharply from here. When buyers tried to push price up, price moved down sharply. Then when the buyers tried to push it up, price moved down sharply. So we know that we can mark this as a swing level. Okay, when buyers try to push price up, price moved down sharply. So this is also a swing level that we can mark here. So you can see that when price broke this swing level, okay, does it mean that the correction is beginning? No. What begins the correction is when price makes that higher low. You can see that price made a higher low and then it started moving up from here. So from this point, you can see that if I go to the 5 minutes time frame, if I cannot see too much, you can see that even if I use the 5 minutes time frame for this, so if for those of you who still want me to use the 5 minutes time frame for this, you can see that this is a swing level, because when price got here, it moved sharp from here, or it moved down sharply from here. So this becomes a swing level. So if I mark this, it's an overall swing level. So you can just mark this. Okay. So because price moved down sharply from here, I mark this. So when price got here, it moved sharply from here. So I mark this as a swing level. You can see that when price tried to come back there, it failed to do so. So price broke and then continued going down. Okay. So at any point in time, let's say you price did this. So you can see that price should show us that, okay, if price breaks above this, so you can see that this was the indication, or this was the indication. Then when you saw this, you might be thinking, oh, okay, price has broken above this support level. So it means that, okay, the correction is actually starting. But remember, I told you that when price breaks a swing high or a swing low, it doesn't confirm if the correction has started. What should confirm if the correction has started? Price should give you a higher low after breaking this level here. So price, you can see that if you had waited for that higher low would have never come. And you can see that price just pushed up too much here. So if I want to mark this, this will be another swing here. So you can see how waiting for that higher low saves you. So you can see that when price made the swing, the next swing level it made was here. So buyers tried to push price up from here, but sellers pushed it down strongly. So this is a swing. So now price made this level of support here, or sellers made this level of support here. So I'm marking this with you. You can also have your opinions on this, or you can put your opinions on what you think in the comments. So you can see that price is making this level of support. Also, when you on the pivot point, you can see that pivot point will mark where we marked accurately. You can see that pivot point mark these levels accurately. So it works. Now it didn't mark here, but obviously I'm going to mark here, because you can see that price moved sharply from here. So yes, that is a point I would mark. Now you can see that price keeps going down. When it's going down, what should it be doing? It should be making lower highs and lower lows, because we are indicating price is still on the indication here. It should be making what? Lower highs and lower lows. Now you can see that when price got to this point, what did it do? It made an equal low. This raises a question as to whether the indication is going to continue. Price shouldn't do that. So when price made this equal low, what did it do? It broke. So now when it breaks, what do? You have to wait for a higher low. Okay. When price breaks, you have to wait for a higher low, or you have to wait for price to confirm to you that, okay, the correction has actually begun. And did price give you that higher low? yes, price gave you this higher low here. Price pushed down all the way to this level without breaking this support level here. So price gave you that higher low, and from then on everything became history. So you can see that price started giving us higher highs and higher lows. So this was that first level of support. And you can see that when sellers try to push price down, buyers push this up. So another level of support here. Another level of support here. Another level of support here. Now, when price is correcting, what should you be doing? Higher highs and higher lows. Price got here, made a high, higher low. So you mark this as your higher low. Because you can see that price bounced off of this twice. But what is interesting is this. Price shouldn't, be making this here. This tells us that sellers don't want price to push above this. So you can see that when price was making that correction and it's got to this level, it's like sellers came to sit here and they tried to push price down. And then price broke below this level here. So I almost took a sell on this today, but I didn't. I avoided this sell and I took a buy instead. But my psychology got me out before price gave me my full profit. So when price broke this swing level here, what were we supposed to do? We're supposed to wait for price to pull back and then come back below this level, as you can see here. So I was waiting for price to come back below this level, and I had placed an alert here. Okay, an alert was here for me for when price comes back this level, comes back down to this level. So you can see that this is where the price showed us that okay, the correction might end here and the continuation is going to start very soon. Okay, so here. So then I placed an alert here that price should come and hit this alert. And the reason why I placed this alert here was because you can see that if price should make that continuation, then it should come back about below this level here, because you can see that sellers push price down to this level, and price can come back to this level again. So price showed me that okay, the continuation was about to begin. Price made a lower high, rejected twice, which further would have made the continuation continue. But you can see that price failed to give me that alert. So when I came back to this, or when I came back, you can see that price was pushing up. Price was roughly around here, and I should have taken my entries from here, but I was still contemplating until price did this, and my entries came from right about here. And then I was skeptical when price made this lower high and it was coming down, so I ended up closing here. So if you're wondering why I took the buys when price came back here, I'm going to show you here. So you can see that when we go to the 1 hour time frame, so this is trading based off the reaction levels. So you can see that at that same level here, this is that same level, and you can see that this is a swing low here, well, a swing high, sorry, this is a swing high here, right here. So you can see that when price got here, sellers tried to push price down from here, and price kept rejecting from this point. We go to the 30 minutes time frame, you can see that there's a rejection, there's a strong rejection that sellers made and push price down. So I'm thinking that anything above that, price can do this thing that it did here. Anything above this level, price is bullish out to this point. So I'm thinking that if price is able to come back above that level, then we'll be able to be bullish to that level that you are seeing here. So that is why I took my entries when price showed me that it wasn't going to make that continuation. So, but all in all, you can see that how ICC plays a part. So you can see that you avoided this loss if you followed everything to the teeth, because you don't enter immediately when price gives you this lower high. You wait for price to come back below this level, and when price comes back below this level, that is where you enter. So you can see that how you are able to avoid certain traps that price has been setting sometimes. And so if you love this video, make sure you subscribe and like and comment your opinions or what videos I should be doing next. See you in the next one.